the failure rate, perhaps I don't have the numbers, but I'm sure the number there would be even higher than 70%. Why do you think that the CVC-backed open innovation?
We need to accept that a venture CEO is a very different beast and should be a very different beast from the typical sort of traditional large corporate CEO.
And we go live. Generally, most of the biggest disruptions that we actually see, they come from the VC-backed companies. Why is it that CVC has been there forever? It has worked with their corporate development divisions, M&A divisions, trying to scout for the right opportunities, and even trying to incubate something that is small and then blowing it up. But still, the failure rate, perhaps I don't have the numbers, but I'm sure the number there would be even higher than 70%. Why do you think that the CVC-backed open innovation fails so much and so often? And another question I would just plug it in is that when you see the structure of these organizations, let's say a big enterprise tells you, I want to build a $100 million business. Do they bring in somebody straight away as the CEO from within the organization, or they bring in somebody from outside? Because the reason why I ask this is that sometimes an employee is not capable immediately to transition into as a founder or as a leader of the business, right? It requires significant amount of training and significant amount of founder's mindset, if I may label it. What are your views on these two things? One is that why CVC Ventures fail so often, and second is that then who gets to be the CEO or the leader?
Yeah, I think if we look at CVC functions in large enterprises, I think for the longest time they weren't necessarily pointed with a digital lens. And so if you're in FMCG, for example, and you're in the corp development function, you've been looking from a sector lens and saying, how can I buy, either competition or people that plug the gaps around my portfolio so that I can own more of the supermarket, for example. So I think there's been a lens that hasn't necessarily had so much digital focus on it until the last few years. I think what's triggered the digital focus is the firms have made attempts to transform internally. They've spent money in the IT department on, embracing new technologies, and sometimes that's worked, sometimes it hasn't. But the first incarnation of that typically didn't drive a whole lot of business value. So even if you were good at cloud or good at AI, the business results didn't demonstrate that there was a meaningful shift, and the customer didn't really see any impact to that. So you saw millions of dollars, tens, hundreds of millions of dollars go in there and not necessarily an output come out. That's the first thing. And then you've seen these traditional firms get challenged around customer experience. Is it digital enough? Is it consumer friendly? Are we being customer first with our products? All of these sorts of things. And so suddenly then you've got increasing pressure on the core business. And that's driven the corp dev teams or the CVC teams to say, this isn't working. We've tried to fix the existing business. Now can we apply a digital lens to how we do corp dev? Either we're standing up new ventures or we're making those digital customer experience type acquisitions, which is quite different to buying a sort of, a smaller player in your existing industry. And maybe you weren't necessarily looking at it with a digital lens previously. And so I think the corp dev teams have had to reinvent themselves to a degree as well, because they now have to be that much more digitally savvy. They need to have sort of VC type people in there. They need to have digital founder type people in there so that they know how to look at these opportunities with an interesting lens. So I think they've had to go on their own journey. I also think if we're honest about the initial incarnation of innovation labs or innovation arms internally, it was kind of PR and marketing frenzy, in my opinion. We had beanbags, we had t-shirts, we were doing hackathons, we were doing accelerators, and everybody got really excited about these events. But I think most firms have gone through that evolution and realized that that didn't move the needle in terms of impact either. It probably drove some brand recognition for a little while, but then there's no impact out of it. There's no follow-on products. There's no impact to the core business. There's no kind of revenue impact. There's no sustained impact, more importantly. And I think customers have got wise to the fact that that's kind of, it's PR and marketing rather than substance. And so I think we've gone through that phase now. And now we're in the phase where you can see some traditional enterprises that are looking much more holistically at how they can do ventures in innovation and more of a CVC model. And I would take, Standard Chartered as a great example of this, actually. They've had 2 or 3 incarnations of what the innovation arm means to them. And I think Alex and the team there, SC, are doing a fantastic job. They've got ventures they're building themselves from scratch. They've got ventures where they're taking things they do really well in the bank today and they are productizing those. I won't talk specific because that's not my place, but things where they think they have some secret sauce because they've been around a long time, they're in many markets. How can they productize those for the outside world? They're doing joint ventures with other startups and other ventures in really interesting spaces. I saw another one this week in the payment space. So, areas that are arguably core to their business, and I'm sure they're investing in the core business in payments, but they've also got this sort of hedge in the ventures business. And still, they obviously run some events, etc. So it's not like you can't run events and you can't bring in outside talent. And so I think that's a really interesting sort of holistic model. And I think SC Ventures actually does that as well as anybody in the region, actually. I think that's one of the blueprints, having learned a lot of lessons along the way around how we can do things. To your second question around who should run the venture and can you take people from the existing business when they're, at the point in their existing core role, not a CEO, for example, or not a venture CEO. I think when you're starting out with a venture, like really starting out, you've got your 5 to 6 person team and you're in the very beginnings, you don't need a traditional CEO as we would imagine it. When you say to the average person, when you think of a CEO, you think of a business manager, you think of somebody a certain age, you think of somebody that's raised funds, that's managed, upwards with the board and downwards with a big organization. What you actually need is somebody in the beginning that's got a tremendous amount of passion, that's got some relevance to the product. They have some industry knowledge, or they came up with the idea and they've developed it to a point. They understand the kind of scrappy, fast cycles that you need to go through to be successful. And so I think we have to take a slightly different lens of what the leader of this group is like. I personally don't like to burden them with the title CEO or anything at the beginning, because I think you can get driven by ego a little bit in that, and there's not much to run in the early days, and it might easily flop and turn into nothing. So I would stay away from fancy titles, and you can find that these people grow into product leaders and business leaders very quickly in a year to 18 months, because along the way they'll have to sing for their supper in terms of funding. They'll see some harsh realities around product market fit. Customers, they're always the best arbiter of, like, is this a real thing or not? Is this a real product? They'll try to bring in talent. That won't always work. So they'll have to handle kind of politics that's inevitable in any firm. And at some point, they'll have to go out and show this is live or not. And over time, I think they will be forced to grow or not, and then they won't be the right person for this. But I think we need to accept that a venture CEO is a very different beast, and should be a very different beast from the typical sort of traditional large corporate CEO. And I don't think either one is bad. They just have different day jobs and different responsibilities. And I think it would be incredibly hard for a kind of 30-year CEO veteran that's managed $1 billion company to switch gears and come and run a venture like this. Not impossible, because they would absolutely have some transferable skills, but I think this is a different opportunity, and one where they need to grow along the way, and they can grow into becoming a CEO. And we've seen a few of these where 3, 4, 5 years in, the CEO has actually said, well, I don't want to be the CEO anymore because I love driving product, I love being close to the customer, I want to be the chief product officer, or I want to be in the coalface actually driving outcomes. And so I think beware what you wish for sometimes, because the title might sound grand, but if your passion is driving customer product fit, then that's maybe where you will stay eventually.